Good morning, everybody. Welcome to the Stock Market Morning Prep video for Wednesday, April the 9th. Well, we did have a pause day, inside day from the previous day's move. Dow Jones up only about 10, NASDAQ up 33, S&P up almost 7, and Russell up 8.5 points. So very, very quiet trading session yesterday. And that really kind of really scares me even more, puts a warning sign that we can't really even bounce here, and that's something of somewhat of a concern. As I stated in the markets are vulnerable at these levels video that I posted over the weekend. So I want to dive right into it, but you got to realize you have the yen up, we have gold up, we have bonds up, and we had equities somewhat up. So they all can't be right, and like I said to you, they always say that the bonds are the smartest guys in the room, and the bond market is, and something here is brewing, and it's going to be, we're going to have an explosive move one way or the other. And let's go right into it. The Japanese yen, as you can see here, had a big move up yesterday. Now we're back into this ascending triangle here. So we did have a little bit of a failed breakout up in these areas. We tried a few times. We do have a Fibonacci cluster up, as you can see here, right up in this area, as well as this little resistance. So there is a lot of overhead resistance, and the 200-day moving average on the daily chart. So, but if it can break out, it will break out, and you're going to see, I think the next big area is going to be 70, this little cluster of the 71.6 and 78 percent retracement here in a Fibonacci cluster in this area. And if that does happen, you're going to see a big sell-off in equities. So watch the yen, guys. The yen is a big mover, and it's a good telltale sign of risk on, risk off. Now look at bonds. It's interesting. The bonds, when you think the bonds are left for dead, boom, they start to rise again. And we've now been in this channel, and this is a big area of resistance here to 134.04. And as you can see, we're underneath that 200. So bonds rallied yesterday. Now we're down to about 7 ticks, but you can see here we just caught that 200-day. And if you looked at the intraday chart, 5, 15-minute chart, whatever you prefer, you would see that the bonds actually picked up some momentum. And again, that's a concern, right? When equities are starting to move higher, you don't want to see bonds move higher. You want bonds to go lower because you want money coming out of bonds and into equities, and that's not happening. So, and a lot of the high-yielding dividends, such as the REITs, the utilities, they're moving higher because there's a safe way to park your money for now until the market turmoil subsides. And that's what we're seeing. So we have rotation of high beta names such as the biotechs and the small cap and the the big cap tech. They're all selling off, and money's flowing into these safe haven sectors, even the consumer staples. That's not a good sign. That's not what actually fuels a rally here. So to me, I think that the markets are pretty much, I need a little more evidence here, but another week or so of price action would probably get me good enough to say that we may have a top in place. Right now, it's still too early, but this is another overlay here. I've shown this to you for since December, and as you can see here, we did get a little pop in equities, but we have a movement in gold, a movement in bonds, and again, I just showed you the Japanese yen. This is not what you want to see. Okay, so now what do you do? Well, we still need to trade, right? We definitely know that cash is a position. When in doubt, cash is a position, but we need to trade. So you want to find out where the money is flowing, and that's what we want to look for. And I want to run through the indices, and I'll show you where I think that money's starting to go to. I've mentioned energy plenty of times. I like the alternative energy. The coal sector has really been on fire, and it just has not produced a good entry, risk reward. But let's go right into the spiders. As you can see here, we held the 50, which is a good sign, right? We want to get back above the 20 and start to move higher. So we'll see what happens today. We're up about 2 1/4 handles in the E-mini electronic session, the pre-market. So nothing so exciting to write home about. But nonetheless, we did catch that. As you can see, we're starting to unwind that overbought reading that we had from the last 5 days. But you can see 2 days of selling wiped out 6 days of gains. So risk off happens very, very fast, as you can see. Now the transports put in a doji yesterday above the 50, above this uptrend line, which is fine, but it couldn't at least get back and take back this candle. So this is what's giving me, I'm not so excited about running into the transports. But I will tell you that some of the truckers look really, really good. I continue to like FedEx and UPS. But again, it has to be the right time because you like it, and if the price doesn't tell you to get in, then you just want to be ready and you want to put that on your watch list. All right, and that's how you're looking. We're waiting to see what happens, what's rotating in and out. Like UPS, one of the better names in that group. Then we take a look at the IWMs. Now, this is one of the other leaders, and it is the weakest of the five. And this broke down below the 50. And now the next test is obviously going to be the 200-day moving average. So not looking too good. Another big red flag here for the bulls. So we need to risk to pick up to the upside. Same as Q's. Q's broke the 20 to 50. So another leader at its lows, catching that January 5th low, probably is going to be the next target, and then of course the 200-day. And then we'd have to reevaluate it. But not looking too pretty, guys. Here, this is again a big red flag here. And the diamonds. Now the diamonds held up relatively well. Again, it bounced a little bit above its 50-day moving average, but it needs a lot of work. So as you can see, all of the indices have broken down. In 2 days, we gave back all of the year's gains in 2 days. So that's pretty stiff selling here. And when you have able and willing sellers at these levels, and then again, I've mentioned this before, you have retail buying heavily on margin, borrowed money that they don't have, you just have a recipe for disaster to the downside. So we got to be cautious here. Okay, now another sector, where's the money flowing? It's going into oil and oil-related stocks. USO had a great day yesterday. I personally missed the trade here, but it looks fantastic. You see how the Bollinger Bands are pinching. Your next stop is going to be $38. So any weakness in USO, I would be looking to buy. And again, your stops would be somewhere around 35.50, and then you would reevaluate it. Okay, but definitely USO. I like the USO trade here. XLE, if you prefer the XLE, same thing. Energy, it's got a little bit of both in it. It's got oil-related, oil services, a couple of the oil and gas. So something like this is also a great. This actually hit the 20-day moving average and started to move up. So I do like XLE. Same thing with OIH, the oil services ETF. So any one of these, you dial into it, and you would pick something that I really enjoy. Now, I like the Apache here, APA. I really like this stock. Now, it is extended. You could see we just got that 2050. We're hanging above the 8. So I would love to see this come in back down into this area here, and then look to start nibbling in and getting long here. It would be easy to manage because if you're here, it would be underneath this area here or underneath this horizontal trend line support depending on your trading plan. But I do like Apache here. Schlumberger, however you want to call it. Again, a little bit extended, but look at the way money keeps flowing into the energy stock. So energy, money's definitely flowing. Now, here's another concern. I've liked the banks and brokers, and now they're starting to break down. Aside from J.P. Morgan and Wells Fargo, which they report on Friday, I would stay away from the brokerage stocks. Morgan Stanley, they actually had they raised their dividend. They're buying back their shares. They passed the stress test, and sure enough, it's still breaking down. That's a warning sign. If it's going to be a leading indicator for the brokers versus the banks, you got to be careful because if the banks start to break down, I think it's going to cap any type of selling. And you can see here, look at Goldman Sachs. Again, one of my favorites back up in here. Now you have to stay away. You just can't touch this. You can't touch it for now. It needs a lot of work. So no trade in the brokerage stocks. And lastly, I just wanted to show you is the euro dollar. And again, why? Because you want to see what risk on, risk off is. And as you can see here, when you have the euro dollar starting to break out, you have dollar breaking down, which would bode well for what? Which would bode well for currencies. So remember, it would bode well for commodity sector. So remember, when you have something like this, and I want to show you the dollar. Here's the dollar ETF, the dollar index, excuse me, not the ETF, the DX, the dollar index. As we break down, commodities will hold true to the upside. So that's why when you're looking at certain sectors and risk correlated assets, you want to see where you might have an edge. And if you see the dollar breaking down, that's why you had a big move in gold and we had a big move in oil yesterday. That kind of held it up and we rallied. And that is really your cue. Once you see that dollar breaking down and you know that money's flowing into oil, you got to get involved. And that's how you have to trade this this turmoil right now while you have this market trying to decide, are we topping or are we moving higher? Okay, so follow where the money goes and make sure you trade your trading plan with tight stops at this time and reduce your risk because right now, really anything can happen here. So in the next coming days, I think the next few days and going into next week is going to be a telltale sign if in fact we're going to go at least challenge the highs. I don't think we're going to make new highs, but if we do start to move higher and make that higher low just under, and we start to break down again, that's going to be the cue that at least the local top's in place and we can start selling rallies. Okay, hope that helps. We will talk to you tomorrow. Have a great day, everybody.